Thanks, Nate. Okay, time for finance now, and let's take a quick look at global markets and basically red across the board. The Dow Jones has closed lower. Our futures are pointing down. The Australian dollar, well, it's been pretty flat after reaching another low this week. It's now buying 62.83 US cents. Brent crude and gold are also pointing down. Well, for more on finance, we are joined by senior market analyst with stock market newsletter Marcus Today, Henry Jennings. Henry, good morning.
Good morning, Emma. Thanks for having me on.
Oh, thanks for joining us. Okay, so we're talking about Donald Trump. Of course,
Yep.
We are talking about Donald Trump every day. So he's been in
time.
office for a few weeks.
Yeah.
Can you just take us through what the reaction's been on the market?
Well, Emma, so far the reaction has been, I guess, kind of positive. There was a lot of fear about tariffs, and we've seen Mexico and Canada obviously been targeted early on, but that was subsequently walked back. Obviously, as well, China is the big key there, and he still hasn't really spoken to President Xi. So we're still waiting for more on that, and China has kind of fired a bit of a salvo back after the 10% tariff was put on with some of the restrictions on some of those critical metals and some of the, a bit of an assessment of Google in China, which hasn't been around really in China since 2010. So there's a lot going on, but so far the markets have seemed to have been a little bit relieved. And what else has been interesting is that the new Treasury Secretary, Scott Bessent, who is a market man, is not set to fight with the Federal Reserve in terms of interest rates. He's looking more at the 30-year and the 10-year bond rates, which are have far more implications, I guess, for the mortgage rate in the US, which is more of a guide than just the Fed. So far, so good for business. But, you know, things can change. Things can spin on a dime, literally, in the space of 5 minutes with Donald Trump. So, yeah, it's been crazy times. But from a market perspective, at least it's been relatively okay so far.
Okay.
Henry, the ASX 200 is now nearing a record high. Why is that? What can you tell us?
Hi, James. Well, we closed pretty close yesterday to a record high. And what's been driving this has been the banking sector, which has been absolutely amazing. Commonwealth Bank is now, well, it has been for some time, the most expensive bank probably in the developed world. It is quite extraordinary. It is being priced as a growth stock. We do have results next week as well. So there's a lot riding on it. Matt Common really has to deliver perfection in the market's eyes to keep this level. So that's really what's been driving it. We've seen gold stocks as well doing well, and tech stocks too. So it's been a pretty good outlook. And we've also seen yields come off as well, interest rate yields come off, and that hope, I guess, was really turbocharged by the latest inflation numbers and the hope that the RBA will cut rates in February, and it does look as if they're set to do that. So that is another positive driving our market. So yeah, we'll pause today, but generally the market feels pretty good at the moment, James.
All right, Henry Jennings, thanks for joining us this morning. And Emma, it's one of those tricky ones, CBA going into an election period. You announce a big profit. There's a big risk you become a bit of a political football, I'd guess, with so many people struggling, particularly with mortgages.
Yeah, it's going to be definitely one to watch.